Great. So Akhil, to start with, what is Gift City?
Up until now, before Gift City, essentially you had to go to Singapore or you had to go to Mauritius or Luxembourg or Ireland to access Indian capital markets. Now all of this is available into India. So when I was running a fund in Mauritius, the operating cost was, let's say, 25-30 basis point on an annual basis. Now the cost has come down to 12 basis points. We can create structures in Gift City for Indian investors to invest in, let's say, US or Europe or Africa. Now assuming the end investor is from Middle East, and in Middle East, and there's no tax, so the entire gross is equal to net, so the entire proceeds are remitted back to the investor account.
So there is no tax incidence on the India side?
No, nothing is deducted at the fund level. That means any investment made by US investors, US citizens outside of US, and the fund is not registered for that 8832, what they call, then they have to pay, it's considered as a passive income from foreign country, right? And you are liable to pay full tax, like 40%. These Bajajes of the world or Reliances of the world or HDFCs of the world were the story of the last 25 years. Next 25 years, new names will come, new entrepreneurship, new business models. We don't know who they will be, right? But they will be. That is what we are sure. So we said, why not we create a fund which is dedicated to Indian promoters, and we called it Founders Fund. The performance over the last 2.5 years is upwards of 30% with a 12% outperformance over the market.
Hello everybody, welcome to another episode of My Money Panda with Wealthy Nivesh. So when we think of international investments, the cities that come to our mind are Singapore, Dubai, Cyprus. But now in India also, government is trying to develop a center which can be for international investments. And the good thing is it's within India's boundaries. It comes under Indian jurisdiction and it offers Indian products also. To discuss the same with me today, I have got Akhil Chaturvedi from Motilal Oswal, who is head of international and alternate business with them. So welcome Akhil, welcome to the show.
Thank you so much. Thank you for the opportunity.
Great. So Akhil, to start with, what is Gift City?
So Gift City has been a unique initiative by our government over a decade now, and finally all the investments which the government has done in building this infrastructure, essentially to promote financial services into India and out of India. So if you see what is GIFT is basically Gujarat International Financial City, and it's a special economic zone, and it's like an offshore jurisdiction within Indian boundaries. What essentially it allows is it helps Indian financial services companies to offer variety of their products in dollar terms to the international investors, including NRIs, global investors, foreigners, FIIs. It also allows foreign financial services companies to set up their shop in GIFT and attract Indian investors to go outside India. So like you rightly said, up until now, before Gift City, essentially you had to go to Singapore or you had to go to Mauritius or Luxembourg or Ireland to access Indian capital markets. Now all of this is available into India. Now what we have seen as institution is that because we had a fund in Mauritius, and if you ask me to compare between Mauritius structure and a Gift City structure, I think the key differences is basically it offers you a lot more as a manager. It offers a lot of ease in terms of operating the business. The structure of the fund through the AIF or a mutual fund or a PMS, whichever license you take, it's much more predictable. The operating efficiencies are far more better as compared to some of the international locations.
Is it because it's located inside India, so they have more convenience with the Indian markets, etc.?
Yeah, it's more predictable. The compliances are much more easier. You can relate to it because we are in India and this location is within India. So and most of the regulations are followed by the IFSC, which is a regulator in Gift City. is basically learning from all the regulations which has been enforced by the Indian regulators. So for capital markets, it would be SEBI, for banking, it would be RBI. So it's much more predictable. Whereas when you go into Singapore or Hong Kong or Mauritius or any of these locations, you need to abide by their compliances, their local regulations, which are also changing from time to time. So again, then you have to get into compliances. Then these cities are very far away. So you need to have board of directors outside, you need to travel for board meetings and trustee meetings outside, and all of these involve a lot of cost. And when you talk about cost in GIFT City, typically because it is in India, the manpower capital cost is much more lower, the rentals are lower, the compliance costs are lower.
Manpower requirement also is lower.
Manpower requirement is also lower. And then when you go abroad, you're spending in dollars, right? So everything is multiplied by 85. Here, that way it's much more easy. Now, how this helps investors?
It's like you're flying from one city to other city of India.
Yes, exactly. And it's very close by, right? Typically if you say that all the cost benefits which we are accruing eventually is then passed on to the customers. So when I was running a fund in Mauritius, the operating cost was, let's say, 25-30 basis point on an annual basis. Now the cost has come down to 12 basis point. So the 17 basis point what you're saving, the 18 basis point what you're saving is actually part of the NAV. It's a part of the return.
So Akhil, let's segregate investors in three parts. One is resident Indians, the other is NRIs, and third is non-Indians. So what are avenues for these three categories of investors based out of GIFT City?
So the easy one is, let's talk about the inbound structure first. So all of our NRI friends who are living outside of India, working outside of India in any part of the world, now as India is doing well, there is a lot of interest of these NRIs to look at India from their asset allocation perspective. Up until now, they used to invest large part of their investments into international geographies. Now if they want to look into India, GIFT is a very nice vehicle for them, and even they can relate, like we can relate to GIFT City, they can also relate to the GIFT City. And like I said, the operating structure is so easy that it's very convenient to onboard them. So
because they have experience of dealing with international financial centers, so they have more comfort also as compared to say resident Indians.
Absolutely. So non-resident investors can access Indian capital markets through the GIFT City structure, and some of the locations also get a lot of tax advantages. So depending which country you are investing from, it will offer you a lot of tax convenience as well, right? So we'll talk about that subsequently. So yes, NRIs can access Indian capital markets. Any foreign investor, any foreign local, any foreign institutions, any foreign corporate, whoever wants to access India, they can now come through GIFT City. Apart from the fact that they can come through a usage structure or they can come through a Mauritius structure, now they can very conveniently come through the GIFT structure also. So GIFT essentially is opening up to the entire gamut of anybody who's outside of India, right? So that's part one. Part two, domestic investors. Now you know that Indian investors are also pretty savvy. They are aware that yes, India is a good asset allocation, but there are good assets outside of India. So there are a lot of markets where there is a good probability of making good returns, whether it's equities, whether it is debt. So now we can create structures in GIFT City for Indian investors to invest in, let's say, US or Europe or Africa or Asia. So we can have equity products, we can have fixed income products, we can have commodity products, we can have structured products. So a whole bunch of things now Indians can access. And now how Indians invest outside is through the LRS limit, which is the liberalized remittance scheme, which allows every Indian per PAN to invest up to $250,000 every financial year. Typically, family of four PANs, $1 million you can remit every year, right? So if somebody is having a portfolio of, let's say, $1 million, can now easily invest 50% in India or 60% in India. You can also invest in real estate through the GIFT City, right? So it's beneficial for both, for the resident Indians to invest across asset classes through the GIFT City, which till GIFT City was not there, it was very difficult to access. Another issue what has happened in India for Indians is that when you are looking at investing at least in the capital markets outside of India, RBI had set limits for Indian mutual fund managers. Now at the industry level, this limit was $7 billion. And per AMC, the limit was $1 billion. Now there has been a big frenzy of Indians putting money outside. So in the last 5 years, especially after COVID, this limit got dried up. So now incrementally, if you want to invest in an Indian mutual fund, which then is investing into international geographies, it's not possible. So the other route now is through the GIFT City.
GIFT City only.
So yeah.
So to summarize, we can say that GIFT City has got two kinds of funds. One is inbound, which invests into India only, and other is outbound, which invest outside India. While NRIs and global investors can invest in all kind of funds,
Yeah.
resident Indians can only invest in outbound funds. They can't invest in those funds which invest back into India.
Exactly.
Correct?
Exactly. And in fact, just to add, for the inbound investors, not only listed equities, so normal mutual funds or PMSAIF, but NRIs or foreign investors can actually invest into private equity funds.
VC
they can
funds,
invest
private
into
equity.
VCs, real estate funds. So we have all of these funds under the MO umbrella as well. So we are offering bunch of unlisted, private equity, real estate, listed, all kind of solutions to our international friends.
So Akhil, when it comes to investment, one part is logistics part. Logistics means how is the documentation, online, offline, what are the requirements, and other part is taxation part.
Yeah.
So how is GIFT City placed on these two parameters?
So in terms of documentation, fairly simple. Essentially, online is still not, it's not possible online right now. We are actively in touch with the local regulators to fix certain things so that we can give this online facility. But there are a lot of platforms which allow you online onboarding, etc. But otherwise, even if you're coming physically, typically what we are asking for is the basic KYC documentation. Once you provide your basic KYC documentation, our local administrators will clear the documentation and give you the green signal to, what we do is we basically pre-fill all the basic details for an application form on an Excel sheet. You can send it back to us. The administrator will do the digital fill up of all the entire form, send back to you for signatures. And then along with that, you send the complete application form. KYC is already done. Once everything is done, typically it takes 2 or 3 days. They will give you the green signal for funding the account. Once you fund the account, you are live and units are allotted.
And funding can come from global bank also and Indian bank NRE also, or how?
Yeah, it can come through any bank outside, through SWIFT. It can come from NRE account also, and can also come from your FCNR deposit accounts also.
Okay, but not from NRO account. For NRO.
Not from NRO. Not from NRO.
Great. And how's taxation placed?
So taxation typically works like Indian taxation only. So if you are, let's say, coming into a mutual fund, so it typically will work like your normal long-term capital gain, short-term capital gain. That's payable. There will be a TDS component. But now there is a special structure which is, let's say in the case of AIF Cat 3, if we create feeder funds, right, which means that the GIFT City fund is actually investing into an Indian mutual fund.
Mainland fund.
Now here there is a nice, the tax convenience part which I spoke about. So just like in India, typically a mutual fund is a pass-through vehicle from taxation perspective. The end investor has to eventually pay the tax once they book they sell the units. Right. So similarly, we are the AIF Cat 3 structure for feeder is giving you the same pass-through facility, right? So you come into a feeder fund through the GIFT City into an Indian mutual fund. When you put a redemption, the money will go back to the GIFT City fund, and then it will get routed back to the end investor. Now, assuming the end investor is from Middle East, and in Middle East, and there is no tax, so the entire gross is equal to net. So the entire proceeds are remitted back to the investor account.
So there is no tax incidence on the India side?
No, nothing is deducted at the fund level for a feeder fund.
No, I am saying even otherwise after redemption, I understood that there is no taxation on the fund side. But for me also, when I file the ITR, I don't have to pay any tax on the Indian side.
Nothing. This is completely it doesn't come under Indian tax authorities.
Let's take 3 layers. One is one mutual fund based out of Mumbai, because it's a pass-through structure, so there is no taxation. Then in GIFT City, there is a feeder fund which invests into this fund. So for GIFT City, those funds which invest into mutual funds in India, they don't have any taxation on their fund level.
At the fund level, yeah.
And when you are based out of, let's say, GCC, where there is no local taxation, then you don't have to pay tax there also and here also.
You don't pay capital gains. The fund has not deducted any capital gains in GIFT. Neither are you liable to pay any capital gains in GCC countries. So actually, you're
Tax-free.
saving your 10, 12 or 12, 15% kind of return. But yes, if you are now, let's say in UK, and in UK also we will be filing for some local registration which can give them the benefit of getting the regular capital gains filing rather than the foreign income filing. So it will save you a lot of tax component. But otherwise, typically whatever remittances are going, if you're in UK, pay your local taxes. If you're in US, you pay your US taxes. If you're in Singapore, pay your Singapore taxes. The only thing we have done for our UK, if the audience is from UK or US, now in US, typically they have funds which the non-US based funds, they have something what they call as a PFIC fund and a non-PFIC fund, right? Now typically if it is a PFIC fund, that means any investment made by US investors, US citizens outside of US, and the fund is not registered for that 8832 what they call, then they have to pay, it's considered as a passive income from foreign country, right? And you are liable to pay full tax, like 40%. Now, what we have done for our Indian products as well as Gift City products is we have done the 8832 registration in US, right? With that, I have qualified my funds to be non-PFIC funds. So now any income coming from Motilal Oswal funds is qualified as non-PFIC and they are not liable to pay 40% tax. The tax which will be liable to be paid in US would be your normal capital gains which applies in US for normal regular local investments, which is 15-20%.
And then they don't have to pay tax on ongoing basis on notional gains also. Is that so?
No, yeah. So they will get a set off. One, your capital gains will come down from 40% to 15% average, let's say it's slab wise. Apart from that, we will give you a K1 certificate. So all the taxes which have been paid by the Indian to the Indian authorities can be set off against the taxes which you are supposed to pay in US. So you can get a set off. It's not that you don't have to pay. There is a set off which is available. Great. Through the K1. Similar thing we are working with the UK authorities to do the local filing, so we can give the similar benefit to UK investors.
Great. And what all kinds of products have been launched in Gift City as of now? If you can, give us broad understanding of the categories.
Yeah. So our subsidiary company, which is on the private equity side, we have done a private equity fund, which is I think it is now about 200 million in size. The fund is closed. We have done a real estate fund. There also we raised about $100 million. That's also closed. My firm, the asset management company, we have done two funds. So one fund, the first fund we did about a year ago was CAT3 AIF Founders Fund. The fund basically is replicating one of the flagship funds of our, which is being run in India. It's run on the theme which is called Founders. Probably we'll talk about it in detail, but so this is about $2 billion in size in India. So it's a high conviction theme for us, and therefore we said that let us offer same product on dollar terms. So you can buy it in INR, you can buy it now in dollar terms. Like I said, in 1 year, it's been the fastest growing fund with $150 million, and we've got some large family offices who have invested. Largely money has come from GCC and African countries. So that's the first fund we did.
Based out of Gift City.
Based out of the Gift City. So this fund is like a fund which is directly managed in Gift City, right? So this fund does apply, it qualifies for the taxes to be paid at the fund level because it's a fund which is directly managed there. So any trades what we do is liable to a short-term gain, long-term gain paid at the fund level. Whatever money you get in your account is tax paid. Okay, that's the first part.
So I'll make one interjection over here. So in Gift City, those funds which invest in further into mutual funds only, they are tax free at the fund level, but those funds which invest directly into equity, they have taxation at fund level.
Yes.
But as Akhil said, when the money comes to you finally, when you withdraw your money, it's tax free for you if it's tax free for you in your host country.
Yes, absolutely, absolutely. So, so that's part one. Second part is the second fund we did was the feeder fund, because we could see that from a tax perspective, feeder funds make a lot of sense. And since we have a variety of mutual funds, our own mutual funds in India, we strategically decided that incrementally we will do only feeder structures, and we will create a replica of every mutual fund scheme in the Gift City. The first fund we chose was the large and mid-cap fund, which comes with a 6 years of track record. We launched it in 2019. It allows investors to get access to the large cap, mid cap, small cap, all the three buckets of the Indian markets. One of the most consistent fund in terms of performance, and also comes with about $1.5 billion in size. So size, track record, longevity, everything was there in place. So we thought that in the current market environment, large and mid-cap fund makes a lot of sense. We just launched that about a quarter back. Very happy to say that that fund also has crossed $50 million. And a lot of interest in this particular structure.
So, Akhil, let's take a step back over here. So, Founders Fund invest directly into equity in India.
Directly into equity.
And this large and mid cap invest into large and
Motilal Oswal large and mid cap fund.
Fund over.
Yes.
And what are the underlyings in Founders Fund? Is it a listed equity, pre-IPO, or VC? What is it?
So the Founders Fund in the GIFT City is purely listed fund.
Okay.
Because as per the RBI definition, NRIs or foreign citizens cannot invest into a fund which is underlying investing into unlisted or a pre-IPO, because for that you need special approvals and clearances. So in fact, for our Indian funds also, if there is a fund where we have a listed unlisted combination, we can take money only from NRO account, not from the NRE account. Right? So yes, in a GIFT City, it's a pure long only listed product. The other one is anyways a mutual fund.
So these are the two products that you have in GIFT City.
This is the two funds. Now, for your benefit, probably you are updated or not, but so we have big plans, right? So we just had a meeting fortnight back with PwC, and they bounced.
So as your T-shirt says, be more.
Be more, yeah. So we keep thinking how to innovate and how to make life easy for all of you. So we got this presentation done by PwC to evaluate that what are the next steps. And I think interestingly, they guided us that converting your institution license to a retail license will basically allow a lot of retail access of foreigners to come into India, right?
So instead of $150,000, you can have a smaller ticket size.
So
also.
In the current license, we have an institution license. So the minimum investment amount is $150,000. When we convert this to a retail license, this will fall down to $5,000. So we can really give a lot of access to a lot of retail investors outside of India. So that's the first thing we are doing, is applying to convert into a retail license, and then subsequently we have plans to launch many more products. And the new thing we'll be launching for your Indian viewers will be an outbound fund.
Okay.
And again, we'll create a US structure, we'll create a Europe, we'll do China, we'll do all kind of buckets. So lot of action planned out in the next 12 months.
So I'd like to make a point over here. So the resident Indian clients who want to invest through GIFT City into global equities or global funds, they have to transfer money under LRS. And as Akhil pointed out, being an Indian, you can transfer $250,000 in a financial year. So a family of 4, if all 4 are adults, they can transfer $1 million to GIFT City and invest into global funds or global assets.
Yes, absolutely.
So Akhil, we discussed about GIFT City, we discussed about logistics, taxation, various kind of products over there. So now let's dig a bit deeper. If you can take us through about your, Founders Fund.
Yeah. So this is, like I said, it's a high conviction idea from the house of Motilal Oswal. We ideated on this product about 2.5 years back, early 2023. Now, like the name suggests, the theme is Founders theme, and Founders means that we are trying to bet on Indian founders or Indian promoters, Indian entrepreneurs. Now, as we say, India is a land of entrepreneurs, right? You are an entrepreneur, employee to entrepreneur, right? So you are E2E. So you were in the bank and now you are an entrepreneur. So I think our country has produced in the past a lot of entrepreneurs, and I'm sure going forward it will create a lot of entrepreneurs. So what we saw was we went into a little bit of past and we studied data, etc. And we saw in the last 25 years, we just wanted to see that what kind of businesses make a lot of money. Now, typically in India, there are 3 ownership structures. There is a owner-driven structure, so the promoters or private limited companies, and then you had public sector businesses, and you have multinational businesses. So you have 3 set of businesses. What we saw in the last 25 years that the fastest wealth or the most consistent wealth creation or the biggest wealth creation in all of these categories, if you see, 2/3 of the businesses were promoter-owned businesses. 2/3. So let's say fastest growing businesses, 9 out of 10 companies were Indian promoter-owned companies. No MNC, no public sector.
So Akhil, when we were growing up, MNC used to be such a fancy word.
Yeah.
But from your data set, it seems like Indians are growing faster than MNCs
Yes, so that
now.
time when we were small, MNCs, we used to reckon with the MNC name.
Yes.
While these companies were very, very small. But 25 years fast forward, those companies are there where they are, but a lot of Indian firms have become bigger brands than the MNC brands.
And you know, when we were growing up, there used to be a fear of MNCs in the sense that they will eat up the Indian market. So as an Indian, we should feel proud that that didn't happen. Rather, it's the Indian-owned companies which are growing faster than
Most
MNCs.
multinational firms have become more Indian than they are the multinational firms. Like a Lever is more Indian than anything else, right? Or a Procter Gamble or a Nestle. They've really gelled with us.
And in fact, in last 25 years, we have seen more and more Indian companies taking over MNCs.
Exactly.
So like Tata started with the Tatley,
Now Indian companies are buying global companies, right?
Yes.
Tatas have bought, Birlas have bought, Ambanis are buying, Adanis are buying. So we are there all over. But I think we are still, this is like a tipping point. We are the 4th largest economy. By the time we become 3rd and 2nd largest economy, we will be very, very relevant. Yeah. So coming back to this, in the last 25 years, like a HDFC Bank where probably you worked in the past, it's just a 30-year-old story, but it's one of the most consistent and the fastest growing, Indian story, or maybe a Sun Pharma, or maybe a Bajaj Group, within that Bajaj Finance, Shree Cement. So all these firms are very, very small firms 25 years back. But when you compare these firms, their growth journey, and the way the entrepreneurs or the promoters have grown these businesses, they are all household names now. And compare them with any MNC or any public sector, these companies have created maximum wealth, fastest wealth and biggest wealth, right? So, and now I think this story looks even more stronger because we are far more evolved, we are far more bigger in terms of size, new kids on the block. I mean, look at so many things happening on the digital side, technology side, consumer side.
So what they call inflection point.
Yeah, so I think, these Bajajes of the world or Reliances of the world or HDFCs of the world were the story of the last 25 years. Next 25 years, new names will come, new entrepreneurship, new business models. We don't know who they will be. Right, but they will be. That is what we are sure. So we said, why not we create a fund which is dedicated to Indian promoters, and we called it Founders Fund. Now, what we do in this fund is we take the top 500 businesses of India by market cap, and we put the first filter, which is any company with minimum 26% ownership by promoters will be qualified as a promoter-owned businesses. And we did slightly something differently.
Skin in the game.
Yeah, skin in the game. We also included senior management ESOPs in the promoter pool, because these days most companies have skin in the game from the senior management also, right? So we've included that also. So the first filtration criteria is the 26% promoter ownership. From 500 companies, you come down to about 350 companies. Then you put the quality filter, which is 15% ROCE++. So that gives me another 250 companies. Then we do the QGLP check. We do the earnings growth check.
What is QGLP?
QGLP is our core investment philosophy: quality, growth, longevity, price. So we do the entire thesis check on all of these businesses. And finally, we have to look at growth. So typically businesses have to produce at least 3% higher earnings growth than the benchmark earnings growth. So from 500 businesses, using these filters, we funnel down to about 25 to 30 companies. Right now, 80% to 100% of this portfolio will be founders only. Up to 20% from risk mitigation perspective, we've said just in case.
Let's have stable names.
Just in case, yeah, there is some good story emerging on the PSU, because you have to perform regularly, so you need some window to have some flexibility around, but largely it's a promoter-oriented fund, and in the last 2.5 years, we've never exercised that 20% window so far. The fund has done enormously well. The performance over the last 2.5 years is upwards of 30%, with a 12% outperformance over the market. And very widely distributed fund. Like I said, it's now $2 billion in size, so about 17,000 crores, and we are raising about $100 million every month.
Okay.
Right, and I said that
100
million, so about 700-800 crores we are getting every month In fact, last month was a record, so it was slightly more than 100. And so a lot of the distribution is widespread, and even in Gift City, like I said, within a year we got $150 million. Right, so people are liking the concept. The construct is good. It's pretty innovative. You don't have too much of competition around this particular theme. It's a diversified fund. It's a very forward-looking fund. You're really betting on which will be that next HDFC, or which will be that next Maruti, or next Bajaj Group, right? So it's a very exciting fund. One can relate. What we have also seen is that when we meet our family office customers, or some of the large promoters, they connect with the fund very, very well, because they feel that kind of sense of something on betting on us, right?
Belongingness.
So yeah, so we feel that it's a great theme, great idea, and something which will be relevant for the next 25 years, right? So this is the first fund which we did in the Gift City also. So now, like I said, Indians
there is one fund based out of Mumbai and one fund based out of Gift City, which will feed into Mumbai-based fund.
Yeah, and for your NRI customers, if they have a NRO account, we have another sleeve on this concept. So one is a listed concept. All stocks are listed, right? But if you have a NRO account, then we have another sleeve which gives you benefit to invest in the unlisted side also.
Okay.
So it's a hybrid product with 70 to 100% listed, 0 to 30%.
Like co-investment kind of idea.
It's not co-investment, but yeah, you can participate in some of the pre-IPOs or unlisted ideas ahead of time. And in India, the way the IPO market is kind of booming. So we've got some very nice ideas on the unlisted in some of our previous similar funds. We bought NSE at a very good price. We got Simpolo, which is the second largest tile producer.
Is it like QIP and anchoring kind of investment?
This is actually private equity investment.
Private equity.
Yeah.
Okay,
we don't go to anchor, so anybody can do anchor. You can do even in a mutual fund. This is actually pre-IPO, you can say, or private equity. Like two businesses we have bought truly as a private equity bet, which is 3 to 4 years, like a Simpolo Tile or a VVDN. That's like a pre-IPO. But some companies we have bought where IPO is just round the corner.
Okay, great.
Right.
So for India-based fund, minimum ticket size is 1 crore INR,
Yes,
and
yes.
for Gift City it will be $150,000.
$150,000, yes.
Great.
Yes,
Great.
absolutely.
Thank you, Akhil. Thanks for joining us and sharing so much of knowledge. I'm sure our audience will benefit a lot out of it.
Thank you so much.
Yeah.
Thank
Thank you.